What if I told you that one man has the power to influence global markets, rescue struggling hedge funds, and even decide how retail investors trade stocks? This isn't a conspiracy, it's the story of Ken Griffin, the billionaire founder of Citadel, one of the most dominant hedge funds and market-making firms in the world. From trading in his Harvard dorm room to managing over $60 billion in assets, Griffin has built an empire that moves markets at will. But Citadel isn't just a hedge fund. It's a financial powerhouse that processes nearly 40% of all U.S. retail stock trades, making it one of the most influential forces on Wall Street. Today, we dive into how Ken Griffin built Citadel into a market-shaping giant, the controversies that have followed him, and whether Citadel's power is a financial revolution or a market monopoly. The making of a financial titan. Ken Griffin's rise to the top of Wall Street was not the product of generational wealth or industry connections. It was a story of sheer intelligence, timing, and a deep understanding of financial markets. Born in Daytona Beach, Florida, in 1968, Griffin showed an early interest in finance. But it wasn't until he got to Harvard University that he truly started making waves. While most college students were focused on their coursework, Griffin was busy setting up a stock trading operation in his dorm room, complete with a satellite dish installed on the roof to track real-time market data. By the time he graduated, he had already turned his dorm room into a million-dollar trading hub, catching the attention of investors who saw his potential. With backing from hedge fund manager Frank Meyer, Griffin launched Citadel in 1990 with just $4.6 million. Over the next 3 decades, Citadel would grow into one of the most profitable and sophisticated hedge funds in the world, consistently ranking among the top performers on Wall Street. But what makes Citadel different from other hedge funds? The answer lies in technology, scale, and strategy. Inside the Citadel machine, unlike traditional hedge funds that focus solely on long-term investments, Citadel operates a multi-strategy approach, which means it makes money from multiple asset classes, markets, and trading styles all at once. It has independent teams dedicated to stocks, bonds, commodities, options, and even cryptocurrencies, ensuring that it can profit in both rising and falling markets. But Citadel's true edge lies in high-frequency trading, the use of cutting-edge algorithms and AI to execute trades in microseconds, capitalizing on tiny price fluctuations at a massive scale. Then there's Citadel Securities, which is where things get even more interesting. Citadel isn't just a hedge fund, it is also one of the largest market makers in the world. This means that when retail investors buy or sell stocks through brokerages like Robinhood, Citadel is often the one executing those trades. In fact, Citadel Securities processes nearly 40% of all retail stock trades in the US, giving it an unprecedented level of influence over market liquidity and pricing. For Citadel, this dual role as both a market participant and a trade executor has been incredibly profitable, but it has also led to major controversies. The controversies that shook Citadel. No financial giant reaches Citadel's level of power without drawing suspicion and criticism, and Ken Griffin has been at the center of some of the biggest financial scandals in recent history. One of the most infamous incidents was the GameStop short squeeze of 2021, where retail investors on Reddit's Wall Street Bets banded together to drive up the price of GameStop stock, causing billions in losses for hedge funds that had bet against it. One of the biggest casualties was Melvin Capital, a hedge fund that had aggressively shorted GameStop shares and was now on the verge of collapse. In a dramatic turn of events, Citadel and another major fund, Point72, stepped in with a $2.75 billion bailout to keep Melvin afloat. Then came the even bigger controversy, Robinhood's trading restrictions. As GameStop's price soared, Robinhood suddenly halted buying of the stock, causing outrage among retail traders who believed the move was meant to protect hedge funds, including Citadel. Since Citadel pays Robinhood for order flow, many suspected it had pressured Robinhood into stopping purchases to limit Citadel's losses. Griffin denied any involvement, but the event led to congressional hearings and widespread criticism of Citadel's dominance in market making. Ken Griffin's biggest plays. Despite the controversies, Ken Griffin's trading acumen and ability to capitalize on financial crises have made him one of the most successful investors of all time. During the 2008 financial crisis, while other hedge funds were crumbling, Griffin made some of his biggest moves. He bought up distressed assets at bargain prices, positioning Citadel for a massive comeback. By 2012, Citadel had fully recovered and was once again one of the top-performing hedge funds on Wall Street. Griffin has also been a major player in the world of high-frequency trading, investing billions into the fastest data processing systems to ensure that Citadel executes trades ahead of competitors. This technological advantage has allowed Citadel to maintain an extraordinary win rate, reportedly profiting on over 80% of its trades. If you enjoyed this deep dive into one of Wall Street's biggest power players, make sure to like, subscribe, and turn on notifications for more financial breakdowns.